Great news for UK pensioners starting. July, 3 surprises you need to know about. If you're over state pension age, there are 3 changes worth knowing about right now, and the third one catches almost everybody off guard. Many pensioners only find out about it months later, once they've already missed the window to benefit. So stay with me for the next few minutes, because this could genuinely make a difference to your finances over the coming year. Welcome back to Retirement Money UK. Today we're looking at 3 pieces of good news affecting state pension recipients, pension credit claimants, and DWP benefit recipients, and why the summer months matter more than most people realize when it comes to getting ready for what's coming in autumn and winter. It's easy to assume that nothing much happens with your pension or benefits between April, when the new rates start, and the colder months later in the year. But that's not quite true. Several important things are quietly moving into place during the summer, and they affect eligibility checks, payment amounts, and how much support you can access later in the year. The reason this matters is simple. Pension credit, winter fuel payment, and wider state pension support are all connected. If you miss a step now, in many cases it can affect what you're entitled to later. And because the rules can be genuinely confusing, particularly around income thresholds and qualifying dates, a lot of pensioners end up missing out on money they were entitled to all along, simply because nobody told them in time. So let's go through what's actually happening. The first piece of good news is the state pension increase that came into effect this year. The basic and new state pension were uprated this April, with the new state pension rising to £241.30 a week and the basic state pension rising to £184.90 a week. This was one of the larger increases in recent years, reflecting how earnings and inflation have moved. For many pensioners, this means a noticeably higher income landing in their bank account each payment cycle, and it's worth checking your bank statements or your online state pension account to confirm the new amount has been applied correctly. Errors do happen, and in many cases, they're only caught when someone checks the figures themselves. The second piece of good news involves pension credit. This is the benefit that often gets described as the most underclaimed support available to pensioners in the UK, and the numbers back that up. It's estimated that hundreds of thousands of eligible households are not currently claiming pension credit, missing out on an average of well over £2,000 a year in support. The detail that often gets overlooked is that pension credit isn't just a cash top-up. Once you're awarded it, it can also act as a gateway to other help, including free TV licenses for over 75s, help with NHS costs, council tax reduction, and the warm home discount worth £150 off energy bills. Depending on your situation, this can add up to a significant amount of extra support over the course of a year, on top of the pension credit payment itself. This is where confusion often begins. A lot of people assume that having savings, a small workplace pension, or owning their own home automatically disqualifies them from pension credit. In many cases, that simply isn't true. The calculation is based on your income compared to a guarantee threshold, and even a small top-up payment can be enough to unlock the wider package of support that comes with it. It is worth checking your eligibility using the Pension Credit Calculator on gov.uk or by speaking to the Pension Service directly, even if you were turned down before or assumed you wouldn't qualify. The third surprise, and the one most people miss, relates to the winter fuel payment. For winter 2026 to 2027, the system has changed again. Rather than being restricted only to those receiving pension credit, the payment is being made more widely available to people over state pension age, with higher earners having the payment reclaimed later through the tax system if their taxable income is above £35,000 a year. The qualifying week for this is set for late September 2026, meaning your circumstances during that specific week, including your age and where you live, will determine what you receive. Here's why July matters for this. The months leading up to the qualifying week are exactly when it makes sense to check your pension credit status, Update your details with DWP if anything has changed, and make sure your bank account information is current. If you're someone who might be affected by the income threshold, this is also the period to think about whether you want to opt out in advance, since later in the year there will be a deadline for doing so. Getting ahead of these checks now, rather than waiting until the autumn rush, tends to make the whole process smoother. Let's look at a few situations many pensioners find themselves in. Take Margaret, 71, who lives alone with a small private pension on top of her state pension. She assumed she earned too much to qualify for pension credit and never applied. When she finally checked using the online calculator, she discovered she was entitled to a small weekly top-up, which in turn opened the door to council tax support and the warm home discount. The pension credit amount itself was modest, but the combined value of everything attached to it made a real difference to her winter budget. Then there's Brian and Sandra, a married couple in their late 70s. Brian receives attendance allowance due to a long-term health condition, but they'd never connected this to their pension credit eligibility. Many pensioners are surprised to learn that receiving certain disability benefits can actually increase the amount of pension credit you're entitled to because of additional premiums built into the calculation. Once this was reviewed, their entitlement changed considerably. And finally, consider David, 68, who is still working part-time and has some savings outside an ISA. He assumed his savings interest would push his income over the winter fuel payment threshold. After checking, he found that interest within an ISA wrapper doesn't count towards the taxable income test, which meant he was still comfortably under the £35,000 limit. Understanding exactly what counts as income and what doesn't made all the difference to his situation. There is another point many people miss. The winter fuel payment and pension credit are administered separately, but they interact in important ways. If you're already receiving pension credit, your winter fuel payment is typically combined into a single household payment, and you won't usually need to do anything further to claim it. But if you're not on pension credit, the payment is now based purely on age and income, which means the calculation works differently, and your share may depend on who you live with. Another commonly missed detail is that pension credit claims can sometimes be backdated, in many cases by up to 3 months, if you were eligible during that period but hadn't applied. This means even a delayed claim could still capture money you were owed earlier in the year. It's a detail that's easy to overlook, particularly for people who assume that benefits only start from the date they apply. Finally, scam awareness deserves a mention here, because fraudsters do exploit confusion around these payments. DWP, HMRC, and the Council will never ask you to click a link or provide bank details by text message to claim a benefit you're already entitled to. If you receive a message like this, it is worth treating it with caution and reporting it rather than responding. So, what should you actually do with this information? First, log into your online state pension account or request a paper statement to confirm your current payment matches the new rate. If something looks wrong, contact the pension service to query it. Second, use the pension credit calculator on gov.uk even if you've checked before or were told you didn't qualify in the past. Rules and thresholds can change over time, and your own circumstances may have changed too, particularly if you've started receiving a disability benefit, lost a partner, or seen your savings or income shift. Third, make sure DWP has your correct bank details and current address, particularly if you've moved or changed accounts recently. This avoids delays when winter fuel payments and other support are processed later in the year. Fourth, if you believe you might be affected by the £35,000 income threshold for winter fuel payment, take some time now to understand what counts as taxable income in your situation and consider whether opting out in advance makes sense for you. This is a decision worth thinking through carefully, since circumstances differ for everyone. If any of this applies to you, there's no need to panic or rush into anything. The sensible approach is simply to check your own position calmly, using official sources like gov.uk, the Pension Service, or trusted organizations like Age UK and Citizens Advice. Depending on your situation, it may be worth a short phone call to confirm exactly where you stand, rather than relying on assumptions. These checks generally take only a few minutes but can prevent missed support later in the year. To recap, 3 things are worth keeping in mind this July. The state pension increase that started in April should now be reflected in your payments, and it's worth confirming that. Pension credit remains heavily underclaimed, and checking your eligibility, even if you've been refused before, could unlock not just a cash top-up, but a wider package of support. And the winter fuel payment system has changed again for the year ahead, with the qualifying week approaching in September, making now a sensible time to review your details and understand how the income threshold might apply to you. None of this is guaranteed to apply to everyone, and individual circumstances vary considerably. But taking a few minutes to check where you stand could make a meaningful difference to your income over the coming months. If you found this useful, consider subscribing to Retirement Money UK for more updates on the state pension, pension credit, DWP benefits, and practical guidance for navigating retirement income in the UK. We cover these changes as they happen, so you don't have to go looking for them yourself. Thanks for watching, and we'll see you in the next one.